Hi, this is our November Pulse update here with Michael P. How are you, Mickey?
Doing great. Enjoying a little bit of a warm break up here in Maryland.
Yeah, how warm is it?
It's 84 on Saturday.
Wow,
We had a
that's
trunk or treat and all of the chocolates melted.
that's warmer than we are because I don't think we've been over 80 degrees since a week ago. So
Yeah, well, I'm
anyway,
sure winter's coming.
yeah, it is for sure. We get cold down here. We'll have 2 or 3 freezing nights during the year. We're not going to have no snow and rain. I mean, snow and ice.
Yeah.
But I will be up there for from December 29th to January 6th. So I'm praying that it's a really great week that week.
Yeah. Well, we haven't had snow in a while, so you've got good chances.
Well, no, that means the chances are against me right now.
Oh yeah.
Anyway, let's see what's going on in the markets, Mike. So long-term yields are up, right?
Yeah.
But they're actually normalizing, sort of, right? Because pre 2009, the long-term treasury was 5%. Mortgages were 5%. 4.5 was like a miracle if you could get 4.5. And now all
Yeah.
of a sudden people are all upset because rates are back up. Now, mortgages are far higher than they should be. Logic says mortgage rates shouldn't be this high, but they are.
Well, and mortgage rates were this high for quite a long time, weren't they?
They were back in the 80s and 90s, but you really haven't seen that since like the mid 90s. You were starting to come down into the 5, 6 range. And then in the early 2000s, you were seeing more in the 4 range, and so forth. So, I think we're back to where logic would say that we should be. Though I do believe long term, the trend on interest rates is going to prove to be higher. That's my thought. And I can't say that it's
Yeah.
true, but that's my thought.
Well, probably higher than zero, right?
Higher than the ridiculous rates the Fed was
Right.
manipulating the market down to for the last 10 years. So anyway, gold is also up near all-time highs, and it's getting people excited about gold. Gold to me is strictly a supply and demand issue. If there's not enough gold for the demand, the price goes up, and if there is, then the price goes down.
Right. We got a lot of conflict in the Middle East. People who live in nations where there's a lot of political unrest, and you might have to pick up and move and evacuate. Gold is one of the things that they tend to lean on. But for most of us, for our clients and the people in the United States, gold is incredibly difficult to work with when it comes as a wealth management asset.
I say that all the time, Mike, that if you're worried about the end of the world, the end of organized government and falling into chaos and Armageddon or whatever, you buy gold. And in Israel and Gaza, you're going for gold right now.
Right.
But the cost of buying physical gold is 10% or so. The cost of selling it again is 10% or so. That's a big bogey to make money on. Most people who have bought gold and silver, even with rates at all-time highs, are telling me they really haven't hardly made any money.
Right. I mean, I think the most successful client gold transactions we've ever seen are where grandma and grandpa got the gold coins and they just keep handing them down. There's no transaction cost. That tends to work okay.
That works okay, but
As long as you don't lose it or it doesn't go up in a fire or get stolen.
if you're just thinking that gold's going higher, you buy GLD. You just buy the ETF, GLD, and you bet on the price of gold. But gold's always been nothing more than a trading play, nothing more than that.
So as far
Anyway,
as the economy goes, we've got the PCE, the Personal Consumption Expenditures Price Index.
yep,
And
that's the Fed's preferred index, by the way.
yeah, yeah, and that has fallen down to 3.6%
Right.
as far as
Which, really wasn't much of a decline from last month's, but at least it's still showing decline. Um, what else is going on in the markets, Mikey?
well, U.S. debt, which continues to climb, doesn't seem to be having an impact on rates, although it probably should.
Yeah, I mean, it's not the amount of debt that's being sold because rates were ridiculously low when government was borrowing all kinds of money to do the pandemic and things like that. What rates tend to respond to is inflation and things of that sort more than anything. So, I'm not worried about that. And the oil market, Mike, has been coming down, even though Saudi Arabia and Russia have been, Russia's not allowed to technically sell, but they do.
Mhm.
They sell it to the countries who aren't agreeing to embargo them. And so those countries buy it cheap from Russia and then stop buying it from the other sources, which then flows the other oil to other people around the world. But despite their pulling back on the production of oil, the price of oil isn't going through the roof. You would expect it to. But you have two interesting things happening. You have all the renewable energies and EV cars that are coming into existence and diminishing to some degree the amount of oil that's necessary to keep those things functioning. But then you also have the remote work experience. I mean, what in our company, how many days a week do people have to actually be in the office? Three. So that's 2 days a week that we've taken off. I went from driving 22,000 miles per year to driving under 5,000 miles per year.
Yeah.
And I used to drive a Tundra, Mike, and I drive a 31 mile per gallon hybrid car today.
Yep, absolutely. And your commute to your office is about, well, it's probably 25 steps.
I don't even know if it's that, but
Well, so lastly, in the news affecting markets or affecting the economy, the United Auto Workers Union, they finally got their big deal, didn't they?
Yeah, they got a good bit of what they wanted, and their strikes worked to some degree. They got more out of the companies, but that's bad news for the country, and that's bad news for the UAW, because I can't tell you how many car manufacturers there are today. Out of China alone, there's like 10 or 15 new car companies coming from shipping cars overseas. And out of the United States, I mean, the amount of EV companies, I can't even name them all. And 99% of them are non-union operated. So it's going to be interesting to see what happens if the UAW continues to try to force these higher and higher costs of building American-made cars. And Ford, GM, and Chrysler, that's the other company called Stellantis now, they don't necessarily have the appeal that they had years ago.
Right.
And the Japanese car manufacturers are all non-union operated. So I don't know what they're thinking about, but I wish them the best.
Mm-hmm. So on to financial planning. You have some thoughts about lawyers and how to caution our clients around that?
Well, I think, lawyers are incredibly professional and wonderful, but they too, just like us, we have to sell certain things. We have to be able to communicate to a client and be able to show them why what we're saying is beneficial to them. But there are lawyers that do things that they don't necessarily have to do, that try to encourage people to work with them. For one, you got a bunch of lawyers running around town doing dinners and estate planning. And, sometimes they're very sincere, and sometimes they do a great service. But other times they're really just trying to sell themselves and then get you in. And
Right.
Next thing you know, you're doing all these different complex, overly complicated things, and you're spending $5,000, $6,000, $7,000, $8,000 doing them, thinking they're doing something wonderful for you. You probably could have spent $1,500. I just want to warn our clients that when you're going to see the attorney, make sure you talk to us first. Not that we're going to do their estate documents, Mike. We don't practice law, but we have a general understanding of the estate planning process, that we can help them solidify what they need to think about and then bring the lawyer in, and then we
Well,
come together.
and make sure that we have the appropriate lawyer fitting the appropriate case. You know, there are some lawyers that we, you know, think really highly of, and you know, they do a great set of documents for $1,200 or so. And we have
Right.
some great attorneys that we think really highly of that are specialized into the ultra high net worth, and their documents can be $25,000.
Well,
And
I don't know they'll be that high, but yeah, you could if we get into really super complicated stuff. But normally you're going to be more like $4,000 or $5,000 to work with those type of lawyers.
one way or another, the point is that there's a range of attorneys and a range of circumstances as far as what might the fit might be.
We also don't like to leave documents with attorneys, because when you leave your original will with an attorney, you're forcing yourself to go back to them if you want to change it in the future, because you should only have one original will outstanding. Okay, so if they're holding it, then you have to go back to them to be able to change the document. Doesn't mean you have to use them, but think about it. Are you going to go back to that attorney and say, I want my original document, but I'm not going to use you? Or
Right.
if you die, you have to get that original will to file it into court. And if you do that, are you going to go back, your family going to go back to the original attorney and say, yeah, I want it, but I don't want to use you? Keep the document yourself. Tell the family who did it. If they want to use them, they can use them. If they don't, they can go easily somewhere else.
Yeah, I think one of the rules of thumb we use is that if you're going to leave your document with a third party, make it a third party you regularly interact with, and that your family all knows and is familiar with, and that your family would think, oh, I go to them if I need this stuff. That's who I'll ask where the document is.
Right now, it's also, Mike, it's company benefit open season, and a lot of our clients have to really think seriously about their decisions. It's not as easy as they think it is. You know, they're going in there and they're making their choices, thinking but you gotta be thoughtful about this. Your medical insurance, if you have a health savings account, you should think about that medical insurance. Most people shy away from the health savings account because they see that high deductible and they say, oh my, I can't pay that kind of deductible. But if the premium comes down significantly enough, it may make that high deductible savings plan economically affordable, as opposed to pumping that money out to pay the premium of a lower deductible policy and never actually using the medical insurance. But you really need to think about that.
Yeah, absolutely. And group life insurance, I think you would say, for the most part, most clients or most people, if they're healthy, depending on their age and their insurance needs, group insurance is generally not a very good deal. Now, on the flip side, if you're not healthy, if you couldn't get insurance otherwise, and you have a life insurance need, not everyone needs life insurance, but if you have one, the group might be a good option if you can't get a policy otherwise. But pretty much that's the only time when the group policy might be a good option, is if you have an insurance need and you couldn't get your own policy.
I can't tell you how many times we have clients come in and they're buying group life insurance, and we look it over and they're spending a ridiculous amount of money for a very small amount of insurance. And we show them how very easily they could go into the private market and get a much better policy that they control themselves. And Mike, where the worst government life insurance is FEGLI, the Federal Employee Group Life Insurance. It's one of the worst insurances I've ever seen. I can't believe that the federal government still allows them to sell that stuff to people, because it's ridiculously expensive. And their only benefit is that when you turn 65, you can keep a little bit of the insurance. I mean, I could have saved up more money by not buying your FEGLI insurance, but you got to look at each case individually, though.
Speaking of bad deals, a lot of companies unfortunately let insurance companies offer all these little teeny risk management policies like cancer insurance and
hospital insurance, and all these kinds of things that there's no risk management purpose to it. Risk management is where you think about something that you can identify, and it encompasses into a bigger issue. So you don't want to identify cancer specifically. You want to look at medical insurance for any disease, and you want to look at long-term disability insurance for any disease or any accident or anything of that sort. You never want to identify something specifically and say, well, I'm going to insure against that. It's just, it's not necessarily beneficial. We all know the duck company that promotes that type of stuff,
Yep. Well, and one policy that might be offered on your from your employer that might be worth doing, but you're going to do it a certain way, is long-term disability insurance, right? True.
Right. So when you're doing long-term disability with your company, you want to pay the taxes on the premium if you can. I can't believe, Mike, how many companies don't allow their employees to pay the
It should be
premium.
the default.
It should be.
Why? But why, Drew? Why should it be the default?
Because if I pay the taxes on the premium, which is normally $300, $400, $500, $600, $700, so you're talking about a couple $100 a year in taxes. If I ever get the benefit, it's 100% tax free.
If you paid taxes on the amount you paid for the premium.
On the premium, right? Which is just a couple $100 a year, maybe, in taxation. If I ever, God forbid, have to get those benefits, and there's $1,000 some a month, and I'm going to have to live off of that, it's tax free. But if the company pays the premium and it's tax deductible to the company and not taxable to me, then the benefits become
Totally
taxable to me when I receive them. And I'll tell you, Mike, you normally only get 60% of your pay on long-term disability. I can live on 60% of my pay tax-free, but I surely can't live on it 60% taxable.
Right. Absolutely.
Crazy, and dental and vision insurance is not insurance. It's a great benefit that your company provides, but people hear that word insurance and think I have to have dental and vision insurance because it's some incredibly beneficial thing. What dental and vision insurance is, Mike, is it's a tax deductible way of providing a little bit of benefit to people, to their employees. It's a tax-free way of providing a little benefit to their employees. But if you need implants and it costs $30,000, your dental insurance is likely to pay maybe $2,000 or $3,000, and that's it.
A lot of the dental insurances have a maximum payout of $1,000.
There's an incredible amount of misunderstanding. Insurance should be something that prevents you from being devastated, not reimburse you for lots of little things. Dental and vision insurance reimburses you for lots of little things, but that's all they're designed to do as a tax-free benefit to the employees of your company. So when you leave the company, if you don't have dental and vision anymore, it's not the end of the world.
Right.
Now, let's get to one last weird, new, quirky thing that you can do with your required minimum distribution. So QCD, right, Mike?
Qualified charitable distribution.
Right. And we say to all of our clients, if you have to take an RMD, required minimum distribution, and the age now is 73 and older, okay?
Right. But
if you're 72 this year, even though last year, if you were 72, you would have had it required, you're not this year. You don't have, your first one is next year. But if you were 72 last year and you're 73 this year, you have to still take a required minimum.
Yep. You still have to take a required minimum, and that's definitely the most powerful option, but you can do a QCD as young as 70 and a half.
That is true. You can do a qualified chair, and that merely means, Mike, that you get the IRA company to disperse a check to the charity of your choice, and you give it to the charity. It's tax-free to you, and it's a charitable contribution to them. Now, you don't get any further deduction. You just don't have to report it as income.
Right.
So you don't take it as an itemized deduction. You just don't have to report it as
But the
income.
most important thing, if you do a QCD, you've got to document that and let your tax preparer know, because there is nothing built into the system to let them know you did one unless you let them know. And if you don't let them know, you're probably going to end up, worst of all scenarios, paying tax on it when was tax-free.
Correct. But here's the new one, Mike. I can take up to $50,000 of my RMD and put it into what's called a qualified charitable annuity distribution. So what that means is I take a charity and I give them up to 50,000. Doesn't have to be 50. I can give them up to 50,000. I give it to the charity, and the charity then turns around and starts giving me back a monthly check. Now, if you're only giving them $50,000, and let's say you're 75 years of age, chances are you're only getting like $300 or $400 a month for the rest of your life. So you'll get $300 or $400 a month, or maybe less. I don't know. I'm not even sure what you would get. Now I think of it, I think of the numbers, probably $250 a month for the rest of your life. Okay. And you'll have to pay taxes on what they're giving you, but you fulfilled your qualified charitable, you fulfilled your required minimum distribution when you took that 50,000 out, and you only be paid taxes on a small amount per year for the rest of your life.
Yeah.
It's a cute little concept that if you can't necessarily give up the full 50,000 and you'd still like some income off of it, there you go.
It's an option.
Charitable distribution annuity. Anything else that we want to talk about?
No, I hope everyone has a great Thanksgiving.
All right, that is true. It's November, right? So we ought to end and say, this is Drew Tignanelli saying God bless.